Alright, what's up guys? So basically, today I'm gonna go over bounces and rejects and how they're pretty prevalent in today's market in comparison to maybe a year ago. Um, right now, as many of you know that are actively trading, there's not a lot of continuation on these moves. So bounces and rejects are key to making some cash flow. So today, basically, I'm going to go over what a bounce play is, what a reject is, how to identify them, and then how to basically just implement them into your playbook, right? So basically, a bounce play is going to be executed on the hourly and the daily into one of the moving averages. So that could be the 5, the 10, the 20, MA or EMA. We look for a bounce on a stock that has broken out of a level like relatively strongly, which I'll go over here in a moment. And then we look for it to pull back into the desired MA that I just went over. Once it breaks through the level again, then that's when we take it on the reclaim. Typically, the risk on these plays are not going to be the same as pivots, right? Because the chances of these working are always going to be a little bit slimmer than the chances of a continuation, the pivot, stuff like that. It's gonna be lower risk play. So basically, I'm gonna go over a bounce on Tesla. Simply, we're just using the 5 EMA on this example. So on Tuesday 13th of May, we can see that we put in a nice pre-market high of 322.65, right? So right off open, you could see that we put in a low of 320.60, which is $2 and about 17 cents off of the pre-market high, correct? But with that relative strength, we know that any dips into our desired moving averages are going to be more impactful, right? So what I mean by that is, as you can see, this moving average was 320.65. This is where you would add your position. Um, then you would add it, right? And then obviously, one of the key things here is you're gonna put a little bit, normally you're gonna have your risk a little bit under the MA or at the MA, right? Um, this next bounce example, which I'll go over, will be easier to kind of give you that risk parameter. So basically, your first target is going to be this 322.60. So you're going to want to reclaim and remount this to go higher, right? So as obviously as you can see, in our Insta market, we did put in another move from 320 to 326.12, which is a phenomenal move. And ideally, that's really all you need. So this is a great first example of a bounce. Now, to identify to get into one, I'm gonna mark out these two, and we'll drop down to the 5 minute. Quickly, I'm gonna go over this example right here later in the day, so 2 hours into the day. Now, so you see how we put in a low of 320.45. So basically back to where it was in that first hour, right? So basically what you're gonna look for now is a reclaim of this moving average again. So 322.58, and then basically you're going to look for the same kind of thing. You're going to look for it to hold above the pre-market high, and then you're just going to let it work. You're going to always have to be a little bit more patient when it comes to bounces and rejects. They're not going to always happen instantly. Sometimes they do, but with your smaller size, you're just going to have to be a little bit more patient. So as you can see, you put in a great move to 327. So in this example, right, you're going to wait for it to reclaim that 322.63 level, and then basically your max pain on this is going to be 320.45, right? So this low serves as a great reminder of what your stop should be. Now, this could be a little bit of a wider stop, but with smaller size, typically, um, your risk, it should be your normal risk, right? So you shouldn't be going in with more than one third of your typical size. But if you're already on lower size, then just put in your same risk management, right? So whether that is $2, $3, just have that in mind. Now, so we're on Tuesday the 13th. I'm gonna go back to here. Okay. Now, you can also use the 5 minute as more of a sneaky entry for bounces and rejects. So, as you can see, let's say, okay, this is exactly the time where we put in that low for that third candle. So, what I would have done here was, as you can see, this is the pre-market high. We tapped it once right here. So you see how we tapped that one time, we tapped it again. So basically, I'm gonna wait for it to actually start actively building above it. So as you can see, we finally got a candle close above it. And this is right around where we started to go up from that third candle. So what I would have done personally was gotten in on this full candle close or just this full build above the pre-market high. And this is where I would have gotten in for, let's say, my second trade of the day. And as you can see, we're on the 5 minute. Now, this is also great too because then your target is going to be the high of the day, right? So that first trade we took to 126 basically, that's going to be our target, right? So we're going to look for our target here. This would be an optimal spot to exit, but if there's no reason to exit, take a trim and then keep going in. There really was no reason to get out of this trade until about 332. Now, this is not going to always happen with bounces. This is going to be more so, um, you know, more so of like an A plus bounce, right? So same thing with this, right? Oops, sorry. Let me let me erase all this real quick. Now, going back to our first trade, backtracking. Sorry to be a little bit confusing. So as you can see, pre-market high, right off the open for the first 20 minutes, you could see that we started to die. And this is where we started to take that bounce out, right? So going in the 5 minute, you can clearly see, right? We were going to look for that remount of the 321.61 and then the reclaim of this 322.63. And as soon as we build over that, um, that's when I would get in for this trade. Now, there's two different ways you could have played this. Is you could have played it off this remount and took in a smaller position size into the pre-market high and look for it to build there, or you could have waited for the dip. So as you can see, we broke through it, we put in the slow, and then as soon as we started holding above the 5 day, you could have got in again, or you could have waited for it to reclaim through the pre-market high again. And then same thing here. There was really no reason to get out until about this third candle right here. So pretty simple. Um, I also do drop down to the 5 minute when I'm looking on the hourly, right? To look for these bounce plays. Now, one thing I will say though is you don't want to take. Let me go back. You don't want to take prime example somewhere. Where's it at? Okay, right here. So let's say you want to find a bounce here, right? This is probably the best example that I could find of when to not take a bounce or a reject is when you're kind of ranging and there's really no relative strength or relative weakness, yeah, we did put in a new pre-market low from this original one, but it wasn't much, right? So on low volume days and low like weakness or strength days, I would say, you don't want to take a bounce, right? You want to take a bounce when it's relatively strong, right? So boom, we put in a lot of relative strength at open, so bounces and dips on the hourly time frame are going to be key versus the previous day, no relative strength, no relative weakness. So trying to bounce any type of MA is not smart at all, right? Because there's no necessarily strength or weakness behind your bounce or reject, right? So you don't want to take anything until it's breaking that relative strength either from a pre-market high, the relative weakness from a pre-market low, or the relative strength from prior high, prior low, weekly high, weekly low, monthly high, monthly low. You get what I'm trying to say. So until you're breaching one of those and you cool off, you don't want to take any type of bounce or reject unless you get confirmation from those. Now I'm going to go over a bit of a reject on, let's go in Q. Now, rejects, basically the same idea when it comes to bounces, right? Same concept. But they're always going to be, in my opinion, rejects are always going to be a little bit harder than bounces. Um, you're not going to get as much money for your trade, in my opinion. Okay, so great example here. So as you can see, 17662, right? So we'll put in that. So you can see this one took a little bit of longer to marinate, right? As you can see, we thought, maybe get some relative strength. Usually on weakness, we're always going to see some type of buying right off open, which is what you want. There was really no reason to go long here. As you can see, we just pretty much put in the same high as the day before. So basically what you're going to be looking for now is a breach of the pre-market low or continuation of weakness. So basically what I would have done was obviously been patient and waited until we started actively building under the pre-market low. So this first time didn't really necessarily work. The second time could have worked, so you could have taken a small position size at this 768, um, and then obviously trimmed once it came down to 494, which is a pretty good move on NQ. But as you can see, it did ended up closing above that pre-market low. So you're always going to have to be quicker because in my opinion, rejects are going to give you less value. So you're always going to want to be quicker on them and give them tighter risk. Same thing with this. So here you're just using the pre-market low as your confirmation. So 705 you could have got in there, or you could got in at the 656 pre-market low again. And then obviously this one was a little bit more of a better flush. Really no reason to get out, but on rejects I typically always get out. I don't really give it too much risk as I do with bounces. Obviously this is just the 5 EMA slash MA example of bounces and rejects. So there's definitely different MAs that you could have done deeper ones. So look out for that too. Now let's go to Tuesday 8th. Okay. I'm gonna find this on the chart real quick. A few more days. Here it is. Wait, no. One more day. Here it is. Okay. Sorry about that. So, as you can see, now, there could have been a few different options here, especially on the sneaky time frame, right? Basically, obviously, you could have taken a small position size at the pre-market high. Oops, right here. right here area, this 168 area. So basically, then you would just look for it to start building under, and as you can see from this 168 area, it did put in a decent size play. So this would be more of like a scalp. So the 5 minute is good for that, and it's also good for just kind of identifying like your instead of looking at the hourly, you're just looking at your 5 minute time frame to see what your play is doing, right? So as you can see, that first initial breach worked out good. The second one didn't work out as good, but the third one, as you can see, it worked out great. So it's always good to define your risk on the 5 minute chart, basically also on rejects. So yeah, that's basically it. Um, if you guys want me to go kind of deeper into it, I can, but it's pretty simple. So you're basically just gonna buy dips into the moving averages when they're strength and buy into strength into the weakness on rejects.